Hey, what's up, everyone? Let's go over today's activities. Stocks rebounded today, and I think if you look at the market, if you look at market sentiment right now, it is not overly bullish, and I think that sets the backdrop for a continuation of the rally and stock market gains. We've seen a correction in some of the tech names, obviously the FANG stocks. Those will likely be bouncing back, all right? We saw some economic data today. I think very interesting and important economic data. Workers received their largest pay increase in nearly a decade. The employment cost index was up 2.8%. It was the largest increase since September 2008. So that's inflationary. I mean, we're starting to see the wage gains flow through. All this, of course, was predicted by myself, talking about the longer-term forward outlook. I said inflationary pickup of inflation. Remember, everybody was saying when the Fed started to raise rates, oh, that's going to squash inflation. That's how the central bank controls inflation. That's how it brings it down. And I was at the very beginning saying that this will result in a ratcheting up of inflation pressures because, very simply, rate hikes equate to price hikes. And we're seeing this. I mean, we're absolutely seeing this happen now. It has been a relatively slow process, but it is plain to see. I mean, you could go back and look at any one of these indicators. Employment cost index, you could look at the CPI. You go back to December 2015 when the Fed made that U-turn on policy and started raising rates, and everything bottomed back then. Gold was at 1,040, 1223. Let me talk about gold a second. It was nice to see gold catch a little bit of a bid today, especially since the yen was weaker. The two have been trading more or less in tandem. There was also a third factor in there, and that was the Chinese yuan, which rallied, had the sharpest rally in a week. Okay, gold has also been very much linked to movements in the Chinese currency, so that had the sharpest rally in a week. We saw gold catch a little bit of a bid, so that's good news. Tomorrow, of course, we get the conclusion of the Fed meeting, which started today. No rate hike is expected. However, the language is likely to tilt very strongly toward the hawkish side. They'll be talking about the acceleration in the economy, the growth in wages, price pressures, etc. So we could see a zombie reaction tomorrow, obviously, in the dollar. By the way, speaking of the dollar, I want to point out that the strongest currency this month has been the Canadian dollar. And that thing was pretty much written off for dead, except by me. Speculators have been short the Canadian dollar for the last 4 months without interruption. That trade is beginning to unwind, all right? And it has, I believe, quite a distance to go. And I think the other currencies will also follow in line with that. The dollar index remains pinned in that trading range that we have seen now for about 4 months, which is like 94, or 3 months, 94 on the low end to mid-95s on the upper end. We have not had a breakout from that trading range. It is winding down. It is coiling in that triangle, basically, and I contend that the eventual breakout will be to the downside. So keep an eye on the Canadian dollar. Keep an eye on the Chinese currency, which had, again, the strongest rally in a week today. Got a bid back in gold. Oil pulled back. We'll get the inventory report actually coming out in a very short period of time, the API inventories. Tomorrow, the EIA report, and of course, I give you the full breakdown. MMT Trader subscribers and Zombie Trading subscribers, they get the full breakdown of the EIA report. And as I've said many times, that report has a lot of information in there. You have to know how to synthesize it. It's not just, looking at those inventory numbers and saying, oh, I'm going to buy, I'm going to sell. No, you got demand in there, you got imports in there, you got production in there, you got exports in there. A lot of stuff in there. You got to know what you're looking at. As for the yen, another sort of nothing outcome from the Bank of Japan yesterday. There was talk of maybe a tweak in policy where maybe they would jettison the negative rate on deposits. Maybe they would back off on targeting that 0% rate on the 10-year JGBs. Those benchmarks, the negative rate still stands. The zero rate for the 10-year still stands. However, they said they're going to be a little bit more flexible. They'll loosen that band. Up until now, if that thing deviated by 0.1%, a tenth of 1%, they would get in there and buy bonds. Now they're saying they would allow it to fluctuate to a degree of 0.2%. So, whoopee. Anyway, the zombies, as usual, took that as a signal to sell the yen, where, by the way, they are very, very short yen as well. Folks, the policies by the Bank of Japan are not bearish for the yen. Negative interest rates are not bearish for the yen. 0% rate on the 10-year Japanese government bond is not bearish for the yen. Running trade surpluses, not bearish for the yen. Pushing towards balanced budgets, not bearish for the yen. You're going to have to see those policies flipped around to really get bearish on the yen. Now, yeah, you're going to have these moments when the zombies see things like this, and because of their complete lack of understanding, it will cause them to behave in a certain fashion. In this case, they will sell the yen, but that has been the wrong thing to do time and time again. Yes, it takes a little time for that zombie trade to unwind, but ultimately the yen goes higher. You do not have the policy here in place to sustain a weaker yen. I mean, we had this conversation. When the Fed started raising interest rates, the dollar yen was at 121. It's at 111 now, or 112. It was in the 110 handle just the other day, just yesterday. So you have to understand that. They all bought the dollar, they sold the yen. Now look where it is. Yen is much higher. The policies in place by the Bank of Japan and the fiscal authorities of Japan, those policies are bullish for the yen. You're running trade surpluses. You have negative interest rates. You're running or attempting to balance the budget. All right, it's not going to happen. I mean, you might have a period of time, a month or 2, 3, maybe 4 months. Wow, like a guy said the other day. Mike, how come? What happened to your nonsense about de-dollarization? Dude, we've been under a dollar regime since Bretton Woods. What's that, 1945, 1946? We're talking over 70 years. And because you don't see it happening in 4 months, then that's nonsense. I mean, that statement is nonsense. So yeah, everything is under control. We know what's going to happen. This is science. Now, before I sign off, let me just mention once again. If you are not a current subscriber of MMT Trader, now is your chance to get on board at the current rate of $145 per month. If you sign up for a 30-day free trial, you are locking in that rate because starting September 1st, the rate is going up to $195 per month. And by the way, that's still a bargain. I have many people here who are current subscribers who say to me, Mike, that is still a bargain, and they would be willing to pay that. But it is not going to apply to current subscribers. I had people who came to me when I started, they're paying $75 a month still. Some paid $100, they're still smart. Some paid $125, they're still smart. Some are paying now $145, they're still smart because it's going to $195. So if you sign up now at pitbulleconomics.com for a 30-day free trial, you are locking in the rate. Nobody does what I do. This is applied MMT. Nobody has this program. Nobody has my background, which is both in economics and trading. And to be able to develop this program of applied MMT. Now, as I said yesterday in the video, this is all science. We don't guess at what is going to happen. We know what is going to happen, and we employ very strong mental game as SEAL Team 6, which is who we are, very strong mental game to ride these positions to their ultimate result, which is profit every single time. A lot of people can't handle that. A lot of people don't like discomfort. A lot of people don't like having to handle adversity. They quit. They drop out. They look for the system fairy. Now, one other thing I want to say, and some people have already started to take advantage of this. If you were a former subscriber of MMT Trader and you come back in now, I will give you your original rate. I have everybody's data. So if you were a former subscriber of MMT Trader, I will give you the original rate. But you got to do it. You got a month to do it because September 1st it goes to $195 per month, the subscription price. All right, everybody? All right. See you tomorrow. Bye-bye.